The economic implications of a war between Iran and Israel for the United States would be significant and multifaceted, especially due to America's global economic ties, energy markets, and military commitments in the Middle East. Here's a breakdown of the likely economic consequences. 1. Oil price shock and inflation. Disruption of oil supply routes, especially the Strait of Hormuz, could spike global oil prices. Higher oil prices, increased gasoline and energy costs in the U.S., could worsen inflation, forcing the Federal Reserve to reconsider interest rate policies. 2. Defense spending surge. The U.S. might increase military support for Israel, including intelligence, weapons, and defense systems, like Iron Dome support. Possible troop deployments or increased naval presence in the region. This could lead to higher federal spending and possibly a larger budget deficit. 3. Stock market volatility. War-related uncertainty typically shakes global markets. Energy, defense, and commodity stocks may surge, but tech and consumer sectors might suffer. Investor fear could lead to capital flight to safe haven assets like gold and U.S. bonds. 4. Strained U.S.-China economic tensions. China depends on Iranian oil. If the U.S. pressures China to comply with sanctions or blockades, this could escalate the ongoing trade and tech war. Possible retaliation from China in trade or investments. 5. Global trade disruptions. War in the Middle East could disrupt maritime shipping lanes, slow down global supply chains, affect U.S. import-export industries, especially in energy, machinery, and agriculture. 6. Sanctions and energy realignments. The U.S. could impose tighter sanctions on Iran, affecting companies that do business in the region. May lead to a reshuffling of global energy alliances, dollar strength versus global instability. The U.S. dollar may strengthen as a safe haven in global turmoil. However, a strong dollar could hurt U.S. exporters, making their goods more expensive overseas. Summary. If Iran and Israel go to war, the U.S. could face higher energy prices, increased defense spending, financial market volatility, and global trade complications, all of which can slow down economic growth and stress government